Hi guys, Lynette Zhang, Chief Market Analyst here at ITM Trading, a full-service physical precious metals brokerage house. Well, today we're going to talk about currency manipulation, that kind of thing. But what I want to let you know is the whole globe has been inside of a currency war, devaluing their currencies. Now, currency intervention is actually a tool that central bankers use quite a bit. So when one country says that another currency is being manipulated, well, quite honestly, they all do it. It's part of the fiat money system. This is an early piece from the Bank for International Settlements where they discuss the management of foreign exchange reserves, intervention needs for the short term and the long term. So how's your currency performing on the short term? If you're trying to boost exports, you want a cheaper currency that's relative to other currencies. So here are all of the different tools according to the International Monetary Fund that the central banks use to manage or manipulate their currencies. They use derivatives. In the spot market is a derivative, swaps, all sorts of things. Go in. Bill will have the links below so you can go in and take a look at them. But make no mistake, when one country is accusing another country of currency manipulation, in my opinion, it's a joke because they all do it. Now, specific to China, these are China's foreign exchange reserves, right? You need to have something to use to move your currency, either strengthen it or weaken it. You can use interest rates. So if you raise interest rates, then more money will buy the currency to capture higher rates than it might be in their country. Think negative rates versus positive rates still in the U.S. And if you want to strengthen your currency, or if you want to weaken your currency, you sell it. If you want to strengthen your currency, you buy it. So in China's particular case, they have been pegged. Remember we talked about pegging. They have been pegged to the U.S. dollar. In that way, they were able to attract all of the corporations to build manufacturing facilities and transfer the facilities here. However, there have been times over that period where they've had to shift the pegs, most notably, most recently in 2015 and 2016, where they shifted that peg. But you can also see that it took quite a bit of their reserves to do that. Here's where they peaked in 2014, and their reserves have fallen since then. Okay, but what are they doing in their reserves with real money? Okay, here's what they report on the gold. And we know that China is a very big consumer of gold. So I put a little relative performance chart with a number of currencies, and I'm going to read this, but you can go in again and you can see that. I compared the spot gold market, the U.S. dollar, which has right now a debt to GDP level of 233%, the euro dollar, which has a debt to GDP ratio of 298%, the renminbi, so the Chinese currency, debt to GDP of 217%, the Japanese yen at 400%, and the British pound at 252%. Okay, let's see. Now, we do know that this is the spot price, but if you're talking about physical gold, real money, versus all these other or any other fiat currency, what has no debt attached to it? Physical gold. It's pretty simple. But mind you, they are master manipulators at that. This is from the 1974 central bankers where they created the gold spot market specifically to impact the U.S. ownership will be the formation of a sizable gold futures market and small demand for physical gold relative to those holdings after a brief initial surge. Okay, well, this is what that looks like. Okay, so where you see the dollars, that is the the paper gold market, and these little areas down here is the physical gold market. This is infinite. This is finite. I mean, you know, and the most current piece that I got, 542 owners for every available physical ounce of gold for delivery on the COMEX exchange alone. That's also manipulating money, manipulating the spot price of gold, because a rising gold price is an indication of a failing currency. And this, do I have that upside down? Yes, sorry about that. This is gold. This is silver. This is basically since the election. And you can see how that moved down. And we've done this many times in these where I show you the actual manipulation. But I want you to take note that spot gold technically has broken out. Its most likely next outcome is for it to test the levels that they hit prior to the election in November. But this is going to show you the true manipulation of it all, and that's just a bunch of currencies against gold's purchasing power. So it's incredible to me that people don't recognize inflation as a fiat money phenomenon. You don't get that with gold, but you do get that with fiat money. It's all by design. It's all of these things are manipulated. It's called perception management, so that you move forward in a manner that supports their goals, which is keeping you inside of the fiat money system so that it's easier to transfer your wealth. So that's it for today. I hope you got a lot out of this. I know there was a lot of material here, but Bill will have the links. So subscribe to us on YouTube, like us on Facebook, follow us on Twitter, and give us a call, 888-696-4653, and share. Share this with everybody. Maybe you can get them to sit for 5 minutes. Have a good weekend. Be safe. We'll see you next week. Bye-bye.